We're going to talk about the main things that we are going to look at to validate a strong supply or demand zone. We should know how to identify both range and pivot zones by now, and we can also look at fractal zones such as an order block width imbalance. So we know how to do that because we watched the supply and demand identification series. Now, there are a few main things that we'll look at to validate a stronger zone. There are more than 3 things, but the 3 main things that we're going to look at, we'll talk about that in just a moment. So first of all, the most simple definition of what we'll call a supply or demand zone is a buy to sell or a sell to buy. So for example, what we have here is we have a quick sell to buy, leading to an internal break of structure, therefore creating an area of demand in the market. So that's a very, very easy way of looking at a demand zone. Whereas with a supply zone, it would be a buy to sell, breaking structure of some kind, therefore leading to a possible area of supply or areas of supply that were generated in the process. So buy to sell equals supply, whereas sell to buy equals areas of demand. So the 3 main things that we're going to look at to basically tell us if we have a stronger zone is, number 1, does it break structure? Is it internal or swing structure? If we are dealing with a lower version of structure, such as fractal structure or internal structure, it may not be as significant as it would be the zone itself that was created, rather. In the case that you've broken swing structure, I would say it would be a more significant zone. So what we have in front of us here is the 1-hour chart on BTC. And as you can see, it is quite aggressive towards the upside. So we can call this 1-hour swing structure. Whereas if we were to take our path tool, we have a high, we have a higher low, we have a higher high, a higher low, and once again, we have a higher high. So what do we know about this? Well, we know that you have an uptrend because you have bullish break of structures here. You have 1 and 2 here. You could argue this was 1, but we're not going to look at that, right? That's more or less lower time frame structure. So we know that we have bullish swing structure. So my question remains, can we find ourselves a stronger demand zone because we see this aggressive pull in market structure from a swing standpoint? We should be able to, right? Number 2, is it a flip zone? Not only can we use flips in a strategy kind of motion where we're looking at a transition of market structure, like counter trend trading kind of play with a flip, whereas you have a reaction up demand, we'll say demand reacts, demand fails to put in a higher high. And once you come down, therefore, the new supply range is shortable. Just ignore that little part there. Not only are we looking at using flips in that regard, we can use flips to justify stronger zones as a whole. So in this case here, during the sell to buys creation or the demand zones creation in this general area here, using internal structure, my question is, how does a sell to buy happen in the first place? Well, it happens because you're reacting off of something. And in the chance that you're reacting off what we call supply, then you have yourself a flip zone. So if we were to look at this wick right here, and we were to draw this wick over from a fractal supply standpoint, this wick, because when you have wicks in a trend, whether it be like a wick such as this little guy right here, or this wick up here, a lot of the time they end up being lower time frame supply zones or areas of supply. So we can actually investigate that very quickly to see if that indeed is the case. Let's go to the 10-minute. Let's go to the 15. So we know that this was a supply range because if structure pointed up, down, up, and then you had the buy to sell, then this entire zone here would have been a supply range. But we are allowed to resort to a wick on the high and call that our area of supply. You don't really have to validate it because there is a thing such as wick supply and wick demand, but if you really wanted to, depending on your level of comfort, you can say that that would be the extreme pivot point of the move. Therefore, it is an area of supply in my experience. So I would still justify that and say, okay, we have ourselves a potential flip zone here. And not only do we have the potential flip zone, we can also look at, is it a sweep zone? So during that demand's creation, during the last sell to buy, did it grab any liquidity? Well, yes, it has. Look, it has taken out this low. So we know that you have all 3 criteria. But what was criteria 1? We missed criteria 1. We talked about 2 and 3. So this was criteria 2. This was criteria 3. Criteria 1 was it needs to break structure. And the better the structure, the better the play, right? So we broke internal structure here to create that demand zone. Sure. But was it really that strong of a demand zone before this guy broke over here? I would say no. So in the event price had came down here and mitigated that order block first, you would not be guaranteed the same reaction that you would have should you have broken this prior to the mitigation. So we broke swing structure. We continued bullishly in the 1 hour time frame. We have the buy to sell. We have the liquidity being engineered. But notice something. There is more liquidity under here. Even though this is more of a local liquidity grab, it doesn't really give me that strong number 3 criteria if it's a sweep zone. I'd rather it be a better sweep like something like this where it took out more liquidity from further structure. Because really, on the 1 hour time frame, the structure from the bottom up was up, down, and then just straight up again. So this didn't really take out a main pivot point. It took out a fractal point over here. So I'll still use that, but I'm not really too concerned with 3. I would say more or less number 1 and number 2 criteria would be the better play here. Mind you, those are always the more important ones anyhow, right? So did it break significant structure? Did it produce a significant move? That's another criteria, which follows along with number 1 really. And then is it a flip zone? Those are always going to be your top 2 criteria when you're looking at refinements. So now we can tell ourselves, okay, so we know that this is now an hourly demand zone because from a fractal standpoint, using the order block with imbalance technique, there is an imbalance remaining here, which could be the criteria we need to justify price coming back in the zone. You can layer on more confluences if you like to, like putting it all together, right? So you can also say, well, you know what, geez, I also have inducement on this zone. So we can call this criteria 4 if we'd like to, even though it's an extra, we can still throw that in there, right? Throw that in the mix. So now we have 4 check marks. This should be a decent zone for a reaction. You could also justify this using market structure. So if this is the lowest demand zone remaining from the previous demand range that was created, this being the entire demand range, then in theory, we're better to mitigate for a continuation than the only demand zone remaining. You would expect something like that. That would be a very nice objective for order flow to hit for another leg up. Now, it is possible to pull into moves like this and then pull away and come back and basically form a range of some kind. We know that's possible because we know how Wyckoff works. But from a general standpoint, in theory, this zone should be a strong demand zone. So let's see what happens when price touches that zone. So you had to move into it. Actually, you came very close to the bottom there, and price is starting to pull away. Notice how price had a very difficult time breaking that first initial high, and then it came up and it finally broke structure there. Price came down. It looks like it's forming some sort of internal Wyckoff structure. And then price rotates back up slowly, possibly forming a newer range. It wasn't the aggressive pull away that we thought we'd get, but now maybe price is too overextended where this is the beginning stages of a range. So we know how to layer on the confluences. That's the most important thing because you want to be able to identify, hey, even though we're not trading these zones without a good reason, we still want to have, and when I say good reason, I refer to a reaction in a lower time frame market structure change coming out of the zone. That's besides the point, right? We can still look at these other confluences to eliminate other areas of demand or supply so our chart doesn't have 1,000,001 green and red boxes on